Well, PSG reporting its first half headline earnings today, up 14%. That's to 239 cents per share. That's coming as the investment company declared an interim dividend of 43 cents per share. On the line now, CEO Pete Maton. Pete, thanks so much for joining us today. So, of course, we know your assets still range from the likes of Capitec to Curro to Zeda to PSG Consult. But let's start off with still the most important investment, the 28.3% stake in Capitec. Now, looking at recurring HEPS there, up at 274.8 million rand, that a rise of 21%. But of course, in the context of, where we looked at the book there from Capitec that showed a 92% rise in loan impairments. So what are your thoughts in terms of the sustainable growth numbers that you're likely to see coming through from Capitec?
Hi, good evening. Yes, it was massively up, and the good thing that comes out, they still managed to push up earnings by 20%, and that must be taken into context with the fact that they had a big rights issue towards the end of the year. So actually, earnings was up by 35%, and it just shows that because they've been conservative through the cycle, they can actually take slightly more bad debts and bad results. But if you look at the Capitec business as a whole, the transaction fee income and the rise that's created brings a whole new dimension to Capitec if you compare it to the other players in the sector.
Mm-hmm. So, of course, I mean, there is, would you say there is validity to the concerns around the exposure of Capitec to unsecured lending, even though, yes, you have seen a lot of growth in transaction fee income, but that transition is still taking place, and as it stands right now, still very much reliant on lending into the unsecured space?
Look, the unsecured space has had its problems, and I think everybody chased market share too much in especially 2011 and 2012. I think Capitec has, their book is very much under control, and I believe it's somewhere we've seen maybe the worst of it, and going forward, I think we're expecting good results from Capitec going forward.
Let's talk about Zeda, and of course that representing your agriculture investments, because 8% rise there in recurring HEPS, and some movements in their portfolio. You now own 71, almost 72% of Cape Span. You've divested of the likes of NWK and Sateves, and of course Chaitin in Zambia is still loss-making. So what direction do you want your agricultural assets to go in? I mean, what is the strategic space that you want to be positioned in along the value chain as well in agriculture?
Look, firstly, up until recently, we owned about 12 different companies in the Zeda portfolio, and part of our strategy of internal focus is to focus on bigger stakes where we have bigger influence. And I think the management team under Norman Sillier, our new CEO, has done very well. And at the moment, we've essentially got 6 core investments remaining in Zeda, and we're actually quite happy with where the portfolio is at this stage. Yes, something like Chaitin is still loss-making, but it's just because we're in the development phase over there, and we're generating a lot of new pivots over there. And actually, from an operational set, the results were very much ahead of targets in terms of yields we've been able to generate on the farm. So we're positive about that investment going forward. Obviously, the Cape Span you alluded to, that is a great business. It operates in 40 countries in the world, and it sources from 20 different countries. So it's actually not a South African business anymore, but a truly international business, and we're quite excited about the prospects in that one as well.
Pete, sorry, we've got to end this off, but if you could just very quickly for us give us some context to your investments outside of South Africa, because you're still predominantly invested in the country.
It is predominantly invested in the country. We've essentially got only 2 direct investments outside South Africa. The one is Chaitin, which is Zambian-based, and the other one is CA Sales. It's a distribution business in Botswana. We are continuously looking. There's a lot of money chasing very few deals in Africa, but we will continue to keep our eyes open for interesting businesses in Africa, and we're also encouraging most of our portfolio business companies to look north and see if they can find interesting growth areas for their own businesses.
Yeah, Pete, thanks for joining us for that. Pete Matan, the CEO of PSG.